Hey guys and girls, it's Daniel Walsh from Your Property, Your Wealth, and today I want to actually talk to you about why savers are losers version 2. Now, the reason why I want to do a version 2 is because the number one video that we put out, which was why savers are losers, had 28,000 views. And a lot of people misunderstood exactly what I was talking about. There's a lot of people out there that really did understand what I was talking about when I said savers are losers. And other people took it a little bit too literal and thought savers are losers, like you just don't save money. And I want to basically explain what I'm talking about when I talk about why savers are losers. Now, I'm not saying that don't save any money and don't put any money in the bank, because you do need to put money in the bank, but you need to be looking at what you're going to do with that money. What is the money ultimately going to do for you? And what you need to be doing is saving money, but then multiplying that money. So multiplying your savings. And you don't multiply your savings by just saving money. The way you multiply your savings is by going out there and investing in assets. So investing in different asset classes. It could be shares, it could be property, but you need to invest, because if you don't invest and you just save, then what happens is your money starts to rot. And I'm not saying literally rot, but what I'm saying is over time, inflation is designed to devalue your dollar. Now, a lot of people don't understand this, but you can actually go onto the government website and it has an inflation calculator. And I put that in there, and it says from 1971, which is when the Australian, or when the dollar was no longer backed by gold, and it's now turned into a fiat currency, meaning that over time inflation would rot the dollar. So I put in the calculator from 1971 till now, 2018 I did, that we averaged 5.2% inflation over that period. That's year on year, 5.2%. So what does that all mean? Now, what that means is that 5.2%, your dollar is devaluing by. So let's say you have a dollar, minus 5.2% each year, and that's what it's going down by. And that means that every single time you save money, each year, it's not going to be giving you as much money in terms of buying power. So let's say you had $100. That $100 in a year's time would be worth $5.20 less on average, and it will be compounding over time as well. This is what I'm talking about when your money is devaluing. You need to be putting this money to work and putting it into hard assets, putting it into assets that are going to appreciate, because places like, let's say, property investing, if you're going to invest in property, that is actually a really good thing when inflation happens, because inflation devalues debt. Over time, your debt is devaluing purely because as you have inflation, let's say 3 and 4 and 5% over time, that is devaluing the debt overall and making assets appreciate. And that's why we have assets appreciate over time, is because of inflation. So I'm not saying that savers are losers. You do need to save money, but you need to be looking at where you're putting that money, because eventually you need to put this into assets to be able to create wealth. You don't see people go out there and save money and save their way to wealth. No one saves their way to wealth. It's the assets that they buy that over time creates the wealth for them. So this is why I'm talking about why savers are losers. This is version 2 of why savers are losers. Now you need to go out there and start looking at investments and why you need to invest. I'm going to be putting a slide at the very end, which is the government website, and also the inflation calculator from 1971 to 2018. And we'll be putting in there what's actually happening over that time, so you can see for yourself. The government even puts it out there for you. They're even showing us that they're robbing us of our money over time. They're wanting to make us work harder, because they're wanting to see that if we work harder, then we're never going to retire. They don't want us to retire. They want us to continue working. And if you get a pay rise, most people feel wealthier, so they continue working. But in reality, they're robbing us, because when we get the pay rise, inflation is also coming. So let's say you get a pay rise of 3%, but then you get hit with inflation of 3%. Your real pay rise is 0, so you've got to keep working forever, because you're never actually creating wealth this way. So what you need to do is you need to save money, you need to put it into assets, and you need to continue to repeat that process over the long term, and you will be able to create wealth. But you need to put in the hard work as well. Anyway, guys, if you like my videos, could you please like, share, and comment. And until next time, guys, have a great day.